What impact does the rise of so many new SPACs have on Berkshire's ability to find and close new acquisitions?
Well, it's a killer. The SPACs generally have to spend their money in 2 years, as I understand it. So they have to buy a business in 2 years. If you put a gun to my head and said you got to buy a big business in 2 years, I'd buy one, but it wouldn't be much of one. We look and look, and now there are, I don't know how many, whether it's hundreds, and there's always been the pressure from private equity funds. I mean, if you're running money for somebody else and you're getting paid a fee and you get the upside and you don't have the downside, you're going to buy something. And I could tell you, but I had I had a call from a very famous figure many years ago that was involved in it and wanted to learn about reinsurance. And I said, well, I don't really think it's a very good business. And he said, yeah. He says, if I don't spend this money in 6 months, I've got to give it back to the investors. So it's a different equation that you have if you're working with other people's money, where you get the upside and you have to give it back to them if you don't do something. And frankly, we're not competitive with that. And that won't go on forever. But it's where the money is now, and Wall Street goes where the money is, and it does anything, basically that works. And SPACs have been working for a while, and you stick a famous name on it, you can sell almost anything. And it's an exaggerated version of what we've seen in kind of gambling done type market. In fact,